Good afternoon. Well, quite the day. Not a total shock. If you'd have read what I wrote this morning, look for a bounce, and I mean it wasn't a dramatic bounce, but we did bounce just the same. And I expect to see more of these bounces coming. Got a lot of news this week, so we'll see. But we are in pretty oversold conditions. So again, it doesn't mean I think we're going one way or the other. It just means that the markets are very oversold and there's a high probability of a pretty solid rally. Nice calling the S&P bond. Thank you. And I am well, and I hope you are well as well. I hope you're getting better. But at the end of the day, again, we have to look at markets objectively, okay, and not worry about the news that's out there. We don't have to worry about the President Biden signing off and lying through his teeth about immigration, okay. We don't have to worry about China and their QE, that they're in trouble, that the rest of the globe's in trouble, and that markets are probably longer term in trouble here. But remember, we don't care. We're not trying to predict the future. All we're doing is looking at what's going on now. Okay. And what's going on now is a market that is extremely oversold, and a bounce is certainly expected. And I would expect probably a bigger bounce. I think one of the good tip-offs this morning was the sell-off early, which was even more. Gold, I'll take a look. I will be happy to look at it right now. No, it's not actually. The fact of the matter is that gold would have been a sale coming into today. Okay. Again, if you were trading, I mean, it's too narrow of a range, and I chose to buy it on the dip, on the big sell-off. But no, it's range bound. You can see, but if you look at the bands, you can see that they're, a couple of standard deviations away from the mean. And again, just to explain one thing, because I know the persons here who had the question and others, on that options futures trade, okay, if you paid 58.30 for the S&P, okay, if you paid 58.30 for the S&P, and I told you to sell, you want to lock in a $4,000 profit if it got there, okay? So we go up 130 points from here at 58.60, which is the number I gave you. What is half of 130? At 65. So a 130 point rally in the S&P from where you got in is $6,500 on the big S&P. Do you follow that so far? It's 6,500 on the big S&P, 130 divided by 2. Let me know if you follow that so I can make sure that you got this, because it's not that hard. Okay. So basically, we are trading 60% of a big S&P. Do you understand that? 6 out of 10. Right? Okay. So if you take 60% of 13, I'm losing my own track number. You take 60% of 6,500, that's $3,900. You got that? So now you follow, correct? Oh, good. All right. Now, again, that locks in. If you paid, I don't know what you paid for your calls, but let's say you paid $5. Okay. So you got 5 times 5 is a $2,500 loser. But if you lock in 4,000 on the future side, you've got 1,500 guaranteed locked up. Okay. So you paid 2,350. So you've got, if you get the 4,000, you've got 2,350 in cost. You get 1,650 locked in, plus you get a free roll on the puts that you own if the market happens to turn around and go back down, which is what we would expect. So we look for a number to get out and lock up the profit, and then we look to go the other way. Does that all make sense? Okay. So let me know if that all makes sense to you, but that's what you're looking for. You want to cover the cost of your options. You want to lock in a little bit of a profit or a lot of a bit of a profit. And then, okay, then we have the world is our oyster. Well, we may not roll Friday. If we happen to get out tomorrow, for example, we may not roll Friday. We may let the trade play out. we may sell the puts early, or we may see if we can get a market meltdown before Friday. If we don't own the futures anymore, there's no roll on Friday. Does that make sense? We wouldn't do anything. We may just close the trade, or the puts might expire worthless. Again, I can't forecast that, but if I know that I got 4,000 and profit on one side of the trade and my max risk on the other side of the trade is 2350, then I know that I've made 1650 no matter what the hell I do from there. How's that? Okay. Now, if obviously we happen to get if we happen to get a rally big enough to get all that done, we might reverse altogether and then sell the futures and buy calls. Okay, but one step at a time. But I hope that gets you at least on the right track. So basically, it's your cost of the options. You want to try to double the cost of your options and profit on the future, and then own the options for free, and then see what happens. Cool. Anyways, so again, we're in the what I call the easy credit high interest rate swindle. This is where you get the easy credit. You give people money they can't afford to pay it back, and then you get them stuck on 29% interest. So we've got a lot of messes out there. I do believe that the banks will be the cause of the next meltdown. You've got Macy's and Kohl's closing stores again. You got Big Lots that just went out of business. So tell me how good the economy is. Okay. Tell me what great shape this economy is. Okay. That's what I want to know. Okay. If we're closing stores and we're losing jobs, and I don't care what the jobs number said, if we're closing stores and losing jobs and closing businesses, how good is the overall economy? Easy credit works so well for mortgage. Ain't that the truth? Okay. I mean, again, it's all bullshit. As Joe Pesci says in Lethal Weapon 2, they fuck you in the drive-thru. Okay, that's exactly what they're doing. Okay, get you in and then you can't get out. It's the old Roach Motel deal. Anyways, sell to close 560 calls, Tuesday expiration. I don't know why you would. Sell to close. You have a position? Is that what you were telling me earlier? Is that what I missed? Right. Oh, 586 last week. Oh, so you're short options. So you want to sell the close? You want to sell to close a short? You want to buy to close a short option? I would do that if I had that much profit in it. Okay. Now we're getting a nice little rally here all of a sudden. Here, look at this. Look at that. A nice little spike here at the end of the day. Okay. Okay, cool. Good for you. Anyways, Connie, I know you're always ready, but I have to always give you the courtesy of saying yes. Look at how fast you are. And I did, you saw my text, right? Unfortunately, you'll see in my bitch what happened to me. In the meantime, as we look at the markets, late after, no surprise, but I thought there'd be a rally all along. I mean, as you know, I wrote it this morning. Okay, and I saw your note, which had said that you expected to sell in the strength, which worked. And if you bought the weakness, it worked as well. So today was a day you couldn't have made a mistake. If you followed the market, you couldn't have made a mistake today. Okay. Tomorrow is PPI. Wednesday is CPI. Yes, they're inflation numbers, but again, they're pretty much priced in to be bad. So anything better than bad could create a pretty big rally. I mean, I expect a pretty big rally. Not that I'm bullish, but just because of where we are in the positioning of the market. Okay. On a longer term basis, not obviously a day trade basis, but just I would expect to see some sort of a rally, probably back to 6,000 S&P. We'll see. Again, I don't know. I'm just giving you my best guess. In the meantime, the dollar, Delta X-ray, continues to soar. Interesting. Again, everybody says, well, the dollar's higher, so commodities got to go lower. Well, gold went lower, but the grains went higher. Again, I think that we get too absorbed into things when what they're supposed to do, when a lot of things are priced in at different times. In the meantime, I would suspect that 110, which is about what we hit today, is going to be resistance. 109 is support. Now, we don't trade the dollar, and again, it has nothing to do with what I think of the dollar. It has everything to do with the cost of trade. That's all it comes down to. And since we can trade the euro currency much cheaper, it's the same trade basically. So we would just look to trade that. But 109 to 110, and I would certainly, if I were trading the dollar, I would certainly be looking to sell dollars. Okay. Nice. Good for you. I would certainly look to sell dollars for now because I expect a pullback, not because I'm bearish or negative, but I would expect a pullback back to about 108. But I think 109 is the first support. The euro currency, which we are long, is again extremely oversold. There's a chance we could hit the buck here before. I think you're going to see a pretty big rally this week, 2 to 3 cents, which is $2,500 to $5,000 in future money. If you want to understand how big the move is that I'm expecting, this is extremely oversold. They're going to have to step in, most likely, and try to prop it up. Okay, so I would think, but in the meantime, there really is no support right now. You're just very oversold. I would have to say that probably 101 would be the next true support level, unless it pops from here. I think you're 101 to 104, pretty big range. Okay. The notes a little bit lower, again, very oversold. As I said, the last couple of weeks we get a little rally. We get these rallies, but you haven't gotten any to follow through. Again, I would suspect that 107 would be the support here. Okay. I think your resistance is 109, but 108 is going to come into play as an area to watch. That would just be some temporary resistance. That's right where we broke down from. Okay. So we'll look at that. The bonds, okay, again, very oversold. I think you're looking at 111 or so. We're right there. I mean, again, some of these numbers are going to be right there. Okay. But I think 111 should be some support here, which it showed already. I think you're 111 to 114. And again, if you've noticed, the Fed has cut 100 basis points. The 10-year notes are up 120 basis points. So the banks got us again. And we, the poor taxpayer, we, the poor borrower, got nothing. So what is so bullish about the rate cuts? Bitcoin, I thought it was going to get to its 85,000 a day. It's certainly pinned at 90. I still believe that there's a good shot it gets to 85,000. Okay. I still think it's 85,000 to 105. Okay. And basically, if you really look at it, you're really in consolidation at, let's say 92-ish to 100. But I think that the 85,000 will come into play. And again, it has nothing to do with my long-term view. Everything I tell you is what I think is happening right now. It has nothing to do with what I believe is going to happen in the future. But we're not trading the future. We're trading right now. We're trading charts we see and acting right now. We're not investing, we're trading. And I think that's something that many people mix up. There's a difference between investing and trading. Okay. Gold got clobbered today. Not a total shock, not a total surprise. We've been long it. I mean, came up to 27.20, failed. I think you're really looking at 26.50 to 27.20. Silver got clocked. Now we have no position in silver, but it made sense that it would sell. Look at where it is. Again, this was our resistance level approximately last week. Okay. Again, look, it doesn't work every single time, but if you continue to look for conditions that are overextended in either direction, overbought or oversold, you're going to find out that over time, you're going to be a lot happier with your performance of your trading because you're always going to be playing on the side of probability. Okay. I think you're looking at here, 29 to 32 still. Okay. Nothing has really changed. Platinum, which we don't trade, but again, very overbought. So the metals in general were overbought and they all sold off a little bit. Now, the real question is what are they going to do from here? Okay. I think that in my eyes, if I were looking at platinum, again, we don't trade it, but I would be a buyer or look to be a buyer at about 960 in platinum. It looks like it has broken out. And of course, this is a breakout of consolidation. If it's a real true breakout, then it shouldn't go much below 960 and pop right back up again. If it's a false breakout, then it's just going to come back and go to 920. Okay. Copper, which we have no position in, I would certainly look, if you trade this stuff, okay, I would certainly look to be a seller of this at 437 if it opens higher tomorrow. Okay. As a trade, I will definitely be selling it at 437 if it opens there tomorrow. I think you're now at 437, 417 to 437. The grains, this is pretty interesting. Now, there's been a big battle in grains over the last couple of months, and it's been mostly down. The shorts have had total control of those markets. I think today's rally, if they open higher tomorrow, I think you could see a pretty big short squeeze in here. Wheat is really still stuck 530 to 560. Corn, which we're short, again, it should come back down and pull back. But either way, if they get the shorts going, then they're going to squeeze them out. But you do have a little bit of a blow off here to the upside as well. Certainly, I will take another shot at like 480. Okay, because again, I do think that they're going back over $5, but I think you're going to see probably 460 or 450 before, and I think we'll use the levels of 455 to 480 for now. Soybeans, again, same as corn, a little bit too much reaction. If they can get up to about 1070, I would look to be a seller. Okay, I think you're looking at 1025 to 1070. And again, I'm bullish overall. I think that they're going higher, but I do think there'll be a pullback and some retracement. Again, markets cannot continue to go parabolic without some sort of a pullback. Does that make sense to everybody? Okay. Cattle, again, I'm out. As I told you, I got stopped out. I still believe, in fact, I do have a resting order in at 200 or $2 because I think it's so close. I cannot imagine it not printing 200. We don't trade it anymore, but I cannot imagine that would be a historic number. Never traded over $2 before. Blah 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 blah. I'd be a seller. I think it's 194 to $2. Feeders, which I don't trade, but they're also at historic highs, but there's no real basis here for me to say anything. I would think you could look at 275 if you want to play them. I think you're 268 to 275. Hogs, which again, I told you to buy them down here, and look what happened. I did tell you I was going to buy them on Tuesday morning last week, which I did, and they're rallying nicely. I think they can go to 86 before there's any real pullback. I think you're looking at 80 to 86. Natural gas, spiked higher, but again, once again, it closed lower. We're still shorted, very overbought. I expect natural gas to come back down to about 340. Okay. Obviously, resistance has to be 440. That's where it went to. So I can't dispute what the chart shows me. Nothing goes straight up. No, nothing ever goes straight up. Usually it will come back down. Even in the internet bubble of the 90s. As big as the rallies were, they did have pullbacks. And again, you'll get a pullback. It's how does it work for you, and how does it manage, and how do you make the trade? That's the things that we're working on. Okay. But either way, okay, 340 to 440, we're kind of in the middle right here. I expect to see it continue to kind of sell off a little bit. We'll see. Crude oil, whack. Look at that go. Broke out of our range. Remember, we're watching the range from 66 to 72 for a while, and then it finally broke and let it go. Now, again, I'm going to give you full disclosure. We don't do this trade yet on Saturdays because I don't have a good enough ETF that I'm comfortable with using against crude. But I did today, just full disclosure, I sold the March crude, okay, which is trading at, well, I'll tell you exactly what I sold it. I don't care where it's trading right now. I sold March crude at 77.60. Okay. I sold it at 77.60, and I bought the January 24th calls. Well, let me get the price up here. I sold at 77.60, 3 full contracts, and I bought 5 full options, okay, at $1.72, okay, And right now, those are trading at, they're trading at $1.52. So it's a pretty good trade at the moment. Okay. But as soon as I can figure out, or if you can trade the big ones, that's what I'm going to do. XLE is not good enough. It doesn't cover enough. Okay. Yeah, well, we'll get to XLE. But anyways, so back to crude oil. Okay. It has broken out. I would definitely look to be a seller, and certainly I would be 100% seller at $80. Okay. I think you're looking at 74 to 80 right now. But this is about 4 standard deviations from the mean right now. Okay. If you look at the average mean, which was here, okay, which was about $2, right now the mean is about $6. So we're about 4 standard deviations away from the mean. Okay, now they can still go up, but there's a much higher probability of a big crack here before it's all said and done. Okay. In the meantime, 74 to 80, and I definitely will be selling at 80, adding on to my already short position. Okay. So again, the markets are still a little bit quiet, but they're getting a little bit more activity into them. Okay. We're seeing a little bit more action, a little bit more stuff going on. And we're going to start doing a lot more of these futures, options, combination trades, which are neutral trades. But as you can tell, they have a chance to be monster winners. Anybody who put them on this morning is profitable on every trade except for the gold trade right now. Is that correct? I would not buy 74s. I don't understand. I don't comprehend why we're going up so much. If we're going to start going back into drill, baby, drill, I think we should be going back lower. I think this is a little bit of fear. If you look at the spread, okay, if you look at the spread, you can see we're 78, 77, 75. You're in backwardation, okay? So this is a little bit of fear. There must be a little trouble somewhere. Maybe this is what happened in Russia. I'm not sure, but there's a reason that the expiring month is so far over everything else. It should be the other way around. These markets should always be in contango. Okay. I don't think so. Okay. They say crude up because Biden increased Russian sanctions. Could be. Again, whatever it is, it doesn't matter. It's going to come down. And especially, again, forget about what's going on around the globe, just based on the overall chart, and that we are normally we're looking to be sellers at 2 standard deviations away from the mean. And now we're about 4 standard deviations away from the mean. I mean, that's, to me, a no-brainer sale.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.